What if I told you nearly half of all Americans pay little to no income taxes? It's true. The IRS reports that nearly 57% of U.S. households paid no federal income taxes in 2021. That means the government relies on a small percentage of high-income earners to fund most of its operations. Now, I'm not saying it's wrong to pay your fair share, but why pay more than you're legally obligated to? There are perfectly legal ways to reduce your tax burden. In this video, I'm going to reveal 8 secrets the wealthy have been using for years to legally avoid paying unnecessary taxes. These are strategies that anyone can use, regardless of income level. So, if you're ready to start keeping more of your money, hit that like button and let's dive in. Let's be real. Nobody enjoys paying taxes. It feels like every year, a huge chunk of our hard-earned money just disappears into this black hole of government spending. And the worst part? It feels like we have no control over it. We work our tails off, get a paycheck, and then, bam! The government takes its cut before we even see it. And let's not forget about those complicated tax forms. Every year, it's like trying to decipher a foreign language. But here's the thing. Most people don't realize that they have more power than they think when it comes to taxes. The tax code is actually filled with deductions, credits, and loopholes that are designed to help people save money. By taking advantage of these legal tax breaks, you can significantly reduce your tax liability and keep more of your hard-earned money in your pocket. So, if you're tired of feeling frustrated and helpless when it comes to taxes, stick with me, because I'm about to show you exactly how to take control and start paying your fair share, and not a penny more. Alright, let's talk tax deductions. These are like magic spells that make a portion of your income disappear from the eyes of the IRS. See, when you claim a deduction, you're essentially reducing your taxable income. And the lower your taxable income, the less you owe in taxes. It's that simple. Now, there are tons of deductions out there, but some of the most common ones include deductions for homeownership, student loan interest, and charitable contributions. For example, let's say you bought a house last year. You know those hefty mortgage interest payments you've been making? Well, you can actually deduct a portion of that interest on your taxes. Or maybe you're still paying off student loans. The good news is, you can often deduct a portion of the interest you paid on those loans as well. And if you're feeling charitable, donating to your favorite cause can also lead to some sweet tax savings. Now, if tax deductions are like magic spells, then tax credits are like straight-up cashback rewards. Seriously, these things are awesome. Here's why tax credits are so powerful. While deductions reduce your taxable income, tax credits directly reduce the amount of taxes you owe, dollar for dollar. There are credits for all sorts of things, like education expenses, childcare costs, and even making energy-efficient improvements to your home. For example, if you're a parent paying for childcare, the child tax credit can put a serious dent in your tax bill. Or if you're looking to make your home more eco-friendly, there are tax credits available for things like installing solar panels or buying energy-efficient appliances. Alright, let's talk about investing because, let's be honest, who doesn't want to grow their money while also paying less in taxes? That's where tax-advantaged accounts come in. These accounts are like secret vaults that shield your investments from the taxman's greedy little fingers. Some of the most popular tax-advantaged accounts include 401ks, traditional IRAs, and Roth IRAs. Each of these accounts has its own unique set of rules and benefits, but they all share one thing in common. They allow you to grow your money tax-free or tax-deferred. For example, with a traditional 401k or IRA, you contribute pre-tax dollars, which means you get a tax break up front. Your money then grows tax-deferred, and you don't pay taxes until you withdraw it in retirement. Roth IRAs, on the other hand, are funded with after-tax dollars, but your withdrawals in retirement are completely tax-free. By utilizing these tax-advantaged accounts, you can not only grow your wealth faster, but you'll also be reducing your overall tax liability in the long run. Now, I've saved the best for last. If you want to build serious wealth and legally avoid paying a ton in taxes, you need to get into the real estate game. And I'm not just talking about buying your primary residence. I'm talking about becoming a landlord and investing in rental properties. Here's why rental properties are such a powerful tax-saving strategy. The IRS actually gives preferential treatment to real estate investors. When you own rental properties, you get access to a whole slew of tax deductions that can significantly reduce your tax liability or even eliminate it altogether in some cases. For example, you can deduct expenses like mortgage interest, property taxes, insurance, repairs, and even depreciation. Depreciation is a huge one because it allows you to write off a portion of the property's value each year, even if the property is appreciating in value. And the best part? You can use the cash flow from your rental properties to reinvest in more real estate, further growing your wealth and minimizing your tax burden. All right, let's do a quick recap of the 8 secrets we've covered today. 1. Tax deductions. Lower your taxable income by taking advantage of deductions for things like home ownership, student loan interest, and charitable contributions. 2. Tax credits. Reduce your tax liability dollar for dollar with credits for education expenses, childcare costs, and energy-efficient home improvements. 3. Tax-advantaged accounts. Grow your wealth tax-free or tax-deferred with accounts like 401ks, traditional IRAs, and Roth IRAs. 4. Rental properties. Build wealth and minimize taxes through real estate investing and take advantage of deductions for mortgage interest, property taxes, depreciation, and more. 5. Self-employment. Starting a business or side hustle opens up a world of tax deductions for business expenses, potentially lowering your overall tax burden. 6. Health savings accounts, HSAs. Contribute pre-tax dollars to an HSA to pay for medical expenses, lowering your taxable income and saving on healthcare costs. Now, I know what you're thinking. This all sounds great, but it seems like a lot to keep track of. And you're right. It can be overwhelming. That's why it's crucial to have a solid plan in place and to seek guidance from qualified professionals like CPAs, financial advisors, and real estate attorneys. These experts can help you navigate the complexities of the tax code, identify the best strategies for your specific situation, and ensure you're taking full advantage of all available tax breaks. By being proactive and taking a strategic approach to tax planning, you can keep more of your hard-earned money, build wealth faster, and achieve your financial goals sooner. So, there you have it, guys. 8 secrets to legally avoid income taxes and keep more of your hard-earned cash. Now, I want to hear from you. Which of these strategies are you most excited to implement? Let me know in the comments below. And if you found this video helpful, be sure to give it a thumbs up and subscribe to my channel for more videos on personal finance, investing, and of course, tax-saving strategies. Until next time, stay informed, stay proactive, and stay wealthy. Look, I get it. Taxes are confusing, and nobody likes dealing with them. But the truth is, understanding the tax code and implementing smart strategies is like having a superpower when it comes to building wealth. The wealthy have known this for years, and they use every legal advantage to protect their assets and minimize their tax burden. And the best part is, you can do the same. You don't need to be a millionaire or a tax expert to start saving money on your taxes. So, take action today. Start by implementing 1 or 2 of the strategies we discussed in this video.